opportunities, community grants, lender grants? You know, is there anything that I might look at because I'm co-buying?
So yeah, even if you were to take advantage of this co-buying, co-ownership platform through Pairgap, as a first-time home buyer, as long as both individuals are first-time home buyers, right? You may be able to be eligible for certain grants. Chase, for example, we offer our own home buying grants if you're purchasing in certain census tracts, anywhere between $2,500 to $5,000 towards closing costs. If you are a veteran and you're using a VA loan through this platform, Chase, in addition to the no money down portion of the VA loan, Chase is also offering $2,000 in closing cost benefits for the VA loan. Chase has an Agent Express program where eligible clients may be able to get anywhere between $1,000 to $5,000 in a post-closing rebate. There's a lot of money to go around with these types of programs. And also, first-time homebuyers may be eligible for any kind of HUD-approved counseling agencies and grants. Now, things get a little tricky with that just because it's the municipalities that make the rules when it comes to those grants. So while Chase can accept any home buyer assistance from a HUD-approved counseling agency, for example, in New York City, we have the Home First program that's administered through New York City's HPD, Housing and Preservation Department. We accept that program. Now, that being said, both individuals would have to apply to that program, and it's up to New York City to approve that. But if they get approved for it, we can certainly accept it. So we also have a closing guarantee. So if Chase is responsible for a delayed closing past the contract closing date, your client will get $5,000 post-closing as well. So there's a lot of incentives and grants that we're able to offer in conjunction with Pairgap and co-ownership of a property.
So we've covered quite a bit. I see the questions popping in the chat box. So I'm going to open it up and turn it to Amerilis so we can pull out some of these questions and we'll go through them. And by the way, if we run out of time and we don't get to your question, do not worry. We are going to circulate everyone's contact information after this event so that you can engage in direct dialogue and think through how you might use this as a solution to create more business for yourself and your clients. So Amerilis, let's take the first few questions.
Absolutely. Thank you, Jaqueline. So the first question comes from Alfred Gill. Are the legal costs higher for this type of lending transaction?
And I'll give that one to you.
So is this, I guess, I don't know if we're talking about for the loan aspect, the legal costs as it relates to the loan. I don't believe that would change. There'd be an additional cost because now you're adding an additional agreement to your real estate transaction. But in terms of long-term costs, it's absolutely going to save them, hundreds of thousands of dollars. If not, many of you have seen how, relationships end when it comes to real estate. You've seen foreclosure situations, a lot of things happen where properties end up in the court system because someone passed away and, there was nothing sort of provided. So those type of situations end up costing more in the long run. So yes, it would be an additional investment up front, but it's not something that's, disproportionate to the benefit that's being gained.
Thank you, Sabine. And the next question is this being recorded? And we did make a statement at the beginning and during the process that yes, it is being recorded. And the next question is, and I believe, Jason, you alluded to this question, how does it affect the first-time homebuyer program and the qualification for purchasing an investment property in the down payment program?
So I would say it doesn't really, as long as both individuals are first-time home buyers, they would be able to qualify for, and to define it for any new real estate agents here, first-time home buyer, someone that doesn't have title to a property in the last 3 years. So as long as that is the case, they will be able to take advantage of any first-time home buying programs. In regards to investment programs, as long as you follow the bank's guidelines with the minimum down payment requirements, credit requirements, and whatever income is needed to consummate the transaction, you're fine.
Yeah, I just
Thank
wanted
you,
to add
Jason.
there, not that this is my area, but sometimes sometimes individuals get confused and think FHA is a first-time home buyer program. Is that the case, Jason?
Absolutely not. You can actually use I've done transactions with where someone has used the FHA loan program twice, but FHA is for the purchase of a primary residence and not necessarily a first-time home buyer. So you could own a home, and if you need to move to another state to work, you can use FHA for a low down payment and purchase a 1 to 4 unit or a condo through that program. So it's definitely not for first-time home buyers. It's a big misconception that we definitely try to dispel, and that FHA loan product is great for clients who may have credit issues, bankruptcies, that sort of thing.
Jason, I have a question regarding, sorry, Nikki, in the FHA as well, just for clarity. If a homeowner, let's say they started out, one of these purchasers started out buying a multifamily, right? And then decided, now they have family, right? They've multiplied and they want to move down maybe to a larger family just for their, like a one family, right? Just for their family. Can they utilize the FHA in that instance as well? They come
Yes.
from a multi and they want to go down to like a large, maybe move out to the suburb someplace.
Yes, so FHA allows it under certain life events.
Mhm.
An increase in family size is one of them, right? So if you got more kids and you need a bigger home, or that's one way that you can use the FHA loan if you already have an existing one. Moving because of an employer, divorce, that a large life, I said large, a big life event would be a reason that FHA would allow you to use the loan again for the purchase of a primary residence, not for an investment property. You got to occupy it.
And I was going to add, I get the question a lot, do the buyers have to live together? And that's totally up to the buyers. I've had clients that want to live there because they don't want to be paying rent and also owning a property. It just makes more sense to live there. But then some want to just invest and not live there and rent out their unit and get that cash flow. Or if they all start, they begin this co-ownership with living in a property and there's some type of conflict and one wants to move out, they can also rent out their unit and get that cash flow. So you don't always have to live at the property.
Thank you, everyone. And I think this is a great segue for the next question. How about a 6-family walk-up apartment?
Well, I mean, listen, that the 6-family walk-up that goes in a commercial space. I think right now, for the purpose of this event, we're talking residential, but in a 6-family walk-up, it would work. In a residential property, it would work. I really believe that it all boils down to that contract and that agreement. And a 6-family, like I said, is commercial property. So putting it in the LLC is something that can work. So yeah, it can definitely work.
Thank you. And this is not a question, but more of a statement. This sounds very appealing. As a listing agent, I would like to get more information and get into this type of program. So that was not a question, it was a statement. So we will have to update the home buyer education presentation for first-time home buyers.
I do have a thought on that, Mr. Alfred Gill. So I created a curriculum around co-ownership, and I think that the home buyer education that's on a federal level is outdated, and it does need to be updated with new ways to purchase property and even ways to purchase property as an investor. Like I said, it needs to fit today's home buyer. And that is really the way today's home buyer thinks is really, now that real estate is trending, that they want that cash flow. They want to use it as an investment. So I absolutely think that the home buyer education on a national level needs to be updated because it's outdated.
Thank you. And the next question is, do the co-owners hold as tenants in common?
Yeah, that's for me. So yes, if the way that the co-owners are going to be purchasing the property is in their own names, they're going to own the property as tenants in common. And for those who don't know what that means, that's basically on the deed, the document that gives the ownership to the property. It's going to state, after it states both of the names of the individuals, it's going to state how they're holding property. And it's important that it's as tenants in common and not as joint tenants. So tenants in common means that if one party passes away, then their interest will go to their heirs. So their loved ones, they can pass on their interest to their loved ones, not the co-owner. Joint tenants is if one party were to pass away, it goes automatically to the other party by operation of law. That means nothing further has to happen. It's just 100% vested in the person who survives. Now, in some relationships, they want that, right? So in marriages and, other situations, maybe mother-daughter, maybe, I see those situations a lot where they do want that. However, if we're talking about a situation where you're either doing it with a friend or you're coming through Pairgap and it's someone who you don't know already, then you're most absolutely going to want to have it as tenants in common, unless we're doing it in a business entity. And then the agreement is also just layering on another layer of protection, which we want to have in all situations.
Thank you, Sabine.
You're welcome.
And Jason, I know that you mentioned this, but can they get approved as an LLC?
Absolutely, by an exception basis. So yeah, so it goes to our legal department. They have the final say. It's the legal department, right? But they'll, as long as it fits within our guidelines to close in an LLC, we've done it plenty of times.
Thank you, Jason. And the next question is, will this build up the business credit? So, Joel, can you unmute yourself and explain your question, please?
Yeah, how you doing? Good evening, everybody. So, it's usually if you set up an LLC, if the person is astute enough, they should try to get a Dun & Bradstreet number. And so they do a D&B, plus them personally, as they're making payments to the mortgage, is that going to be tied into that LLC? Because the title is under the LLC and the person's individually, right? So I'm just trying to clarify that.
So, Jason,
Jason, did you hear the question?
sorry, okay, somebody's muted.
Someone's unmuted. If you could mute them, Amy.
So Jason, what else?
Hold
Nikki, unmute yourself, please.
Everyone got muted just now. So Nikki, you're gonna have to unmute yourself.
There we go. So I think what Joelle was asking was, in terms of the mortgage, if it's originated on the LLC, does that show up on the business credit, or when it's originated, or is it being approved based on the individuals and it shows up on the individual's credit?
So let's clarify the mortgage, because remember, there's two instruments. There's the mortgage note, that's the promise to repay the bank, and then there's the deed. The deed will be in the form of an LLC. The LLC will have ownership of the property. The mortgage note, that promise to repay the bank, that will be in the name of the individuals that own the LLC. So to answer the question, the mortgage information and mortgage repayment information is reported to the credit agencies. That will affect your personal credit. As to whether that affects business credit, it's actually something I'll take away and ask one of our business bankers at Chase just to verify. But just going off of my gut, I would say no, because the payments are being made to that mortgage in the individual's names, and that's what's being reported to the credit agencies.
Jason, and I believe this question is for you. Joel, you have another
think-
question?
Yeah, I was gonna say. Unmute Joel, sorry.
I have a quick,
Hold up, everyone got muted again. You're gonna have to unmute yourself, Joel. Sorry.
all right, so is it possible after they get approved, Jason, that they can refinance and try to get a business loan, or any way that the LLC could be a co-signer on something like this?
To my knowledge, no, because again, it's still a residential mortgage transaction. It's still, the mortgage itself is still between two individuals. So we wouldn't be
Okay.
able to refinance the mortgage into an LLC. That would be a business loan. It's more of, if they were to refinance it, you can certainly refinance it into the mortgage would be in the individual's name. Title would still be held in LLC, as long as it's through Chase and our legal department approves it, which I would think that they would, because it's already in an LLC already. But to answer the question, the mortgage itself would not be able to be refinanced into a business, into the LLC.
Okay,
Yeah.
thank you.
I'm gonna
And
jump
this
in.
is a great, segue for the next question. And Jason, I believe this is for you. How long must the business be in place prior to getting the loan? And whose tax returns are reviewed?
So it's a good thing I spoke to my local underwriting manager before this panel, right? So just to refresh my memory on all of this stuff too, because the guidelines always change. So the LLC, as long as it's been, it could be a brand new LLC, but it has to exist for at least 60 days. And the reason why is because we need that certificate of good standing that's issued by, let's just say it's New York State, right? New York State has to issue that certificate that you've been in good standing for 60 days. So from an underwriter's perspective, or at least the legal department, the LLC has to exist for at least 60 days before the state can issue that letter. So today, my underwriting manager confirmed that with me, that is the case. Now, the second question, let's see, where was the tax returns? So since this is in an individual's name, if they're creating an LLC for the purpose of this transaction, there will not be any business tax returns until they file next year. So there won't be anything for them to review. Now, if this was like some kind of real estate LLC holding company that they've had for many years, the underwriter does have the discretion to request those tax returns. Even though we pull the tax transcripts, they do have the discretion to pull those tax returns. They're not necessarily looking at it for qualification purposes. They just want to make sure there's like no negative income or any kind of funny business going on. If it's just a regular holding company and it's not really being used for any kind of business purpose other than holding that real estate, you should be fine.
Thank you. Okay, next question. One final question on the LLC. There's a standard form. Okay, there is a standard form of LLC agreement, tenant in common agreement, etc. So let me get to the question. Let me make this a little bit. So this is regarding the LLC agreement, tenant in common agreement that the co-owners execute. And okay, how would it deal with a default by one member or tenant failure to make the mortgage payment?
So there's no, I guess, standard public form, but working with Pairgap, we have created an agreement to deal with these co-ownership issues. And Nikki has, not only have I been a part of that, but we've had like a committee of attorneys be a part of this drafting process. And particularly with the non-payment issue, one of the features that we've added was that situation where the individual who's not paying starts to lose equity within the property in proportion to their non-payment, so that the other owners continue to gain that interest. So that's one way that we sort of deal with it. I mean, obviously the mortgage has to get paid, so someone's going to have to come up with the money, but at least as an incentive for having to step in and, you know, come up with those additional funds.
Thank you. And I believe this is coming from an agent. Is this a program that will give us a list of qualified buyers? I guess you missed that part.
So I can,
Unmute, Nikki.
so I'll answer that question. So with the list of qualified buyers,
You're muted, Jason.
okay, there we go. Sorry about that.
With the Pairgap partnership, I mean, that's what partnership is all about. I have, you know, throughout this whole process, we've had so many buyers that are pre-approved and pre-qualified that need property. So that's what the partnership is for with Pairgap. Creating this partnership will give you access to those co-buyers. So yes, and we'll talk about that more in the end and show you how you're able to sign up and become partners with Pairgap. Sorry, Jason, you wanted to add something?
All I was gonna add was like, hey, Chase also has a platform to give qualified buyers to real estate agents too, called Agent Express, and we can certainly take that offline. So look, the business has shifted. I know everybody's looking for any kind of leads or anything that can help improve business. So that's why we're doing this webinar, because we're here to help you tonight.
Thank you, Nikki and Jason. And the next question is, can this vehicle be used to avoid foreclosure?
You know, I think it could. I know it could. There's a lot of different innovative products that are coming to the market where there's co-ownership with corporations, right? So corporations are helping out people that have been in trouble, and they're adding themselves on as owners because this person is defaulting or may have some difficulty paying. And then they become owners and share that ownership until that owner gets back on their feet. So I think there are more and more products out there that are using this co-ownership model, including to help people who are facing foreclosure. So I think it's interesting how these products are coming to the market, and I'm curious to see how that is going to help to avoid people from foreclosure.
And I'd like to add to that. Most recently, like this week, someone reached out to me, a different, it's actually on a commercial type of deal, but the concept remains the same, right? They were like, hey, it's something where they potentially could lose a property or lose the deal. And they're like, hey, we're looking for a partner, right? We're looking for a partner to make this happen. And if I owned if I own a home and I know that I owe X amount of dollars or a large amount of money to the bank, and I could, own something versus nothing, and someone could come in and assist me with that process, and I can maintain a degree of my equity versus none, might be a concept, right? Might be a way to start looking at things, because when it comes to foreclosure, and I have seen this being a short sale specialist and dealing with so many people in foreclosure, they bury their heads in the sand, right? And they're fearful and they're scared. If there was an environment where they could come to and have these kind of conversations and save their homes versus not having anything and being thrown out in the street, I think it's an absolutely amazing opportunity when done with the right legal concepts, right? And this is what Sabine and
I was
Nikki put together.
I was gonna add to that how I saw the question come up and sort of like my antennas went up, because what's been missing from, like, these situations have happened, right, where people try to save people from foreclosure or try to find an opportunity when people are facing foreclosure. This could be another avenue to really help people in adding that legal protection piece for the owner and the investor, to make sure that everyone, his interest is protected in the transaction. And also, real estate agents can find another creative way to have an incentive for putting these type of deals together as well, so everybody is sort of happy. Maybe logistics need to get worked out, but it is an opportunity for finding new ways to help put individuals and put deals together.
Thank you, Sabine. And Nikki, this is for you. Is there any type of referral fee for the Pairgap program that agents have to pay?
No, there is going to be a membership cost that we are building today for the next phase of the platform. Right now, it's important, and one of the reasons why I chose to focus or we chose to focus on the real estate community and housing professionals is because they, the industry needs to be educated. And so we are focused on the education of industry professionals. And in the next phase of the platform, we are going to be, launching our membership course and how you can be part of that and receive those leads through a digital process.
Thank you, Nikki. And the next question is for you also, and I believe Jason. What state is Pairgap? I guess in what state is Pairgap in? And also, in what state is JP Morgan Chase available to purchase property?
That's a good question. We're a national company, so you can purchase within the US and we can service you. It doesn't matter where you are. And in terms of Chase, I believe Chase lends everywhere as well. So,
all 50 states. I am licensed to originate mortgage loans in all 50 US states. So that's the answer to the question.
I'm going through the questions, one moment. How guaranteed are these leads?
Well, when we service our customers, they get a pre-qualification. So these are ready buyers. So once real estate agents and brokers receive these leads, they're ready to go. They're already pre-qualified. Now just documentation has to be verified.
Piggyback off of that, if you're working with a lender like Chase, Jason will be the first to tell you, we will go ahead and pre-underwrite the documents while Nikki is preparing the co-buying clients so that we can actually do both at the same time. So when you get those leads, they're committed to co-buying together, right? So their motivation is already settled and their finances are already settled because we've already looked at the document. So we can take that step further.
Thank you for that clarification, Jaqueline. I'm not sure if we asked this question already. Can you sell your partnership?
So am I still on mute? Oh, okay. So let me just say that, when you purchase property together and you want to sell your ownership and everyone is on the mortgage, you do have to refinance to get that person off the mortgage. So if there is something inside of that real estate prenup that says that, you have to sell within a certain amount of time, or you can bring somebody else in, sell your share to someone else and bring them in, as long as they qualify, what their role is going to be. Are they going to be on a mortgage? All of those things are going to be in your real estate prenup, in your contract. So it depends on what that contract says. And Sabine, if you want to add to that, but the contract is really going to dictate what's going to happen if someone wants to sell or if someone defaults.
Yeah, so, I always think it's important to layer on protections and make things as easy as possible. So with co-ownership, owning it in individuals' names, you do come to that challenge where you're going to have to deal with, selling and then refinancing and getting the property out of one person's name. Now, if you have it in an LLC, it makes it a little bit easier in that you can sell your interest in the LLC. So these don't have to be transferred, but you are going to still need to refinance if your name is on the mortgage. With respect to the agreement, yes, absolutely. These are different options that are offered. in terms of being able to buy out the other, we sort of talk through those options. Can you be bought out of this relationship? How long do you have if you want to be bought out? How long do you have to find another buyer, a qualified buyer, the approval of the other co-owner of the new buyer, and all that good stuff? And of course, Pairgap could continue to help with matching or rematching in that instance.
Amy, I'd like to address something that's in the chat. It's in this arena where I think it wasn't a question, I think it was more of a statement about someone having a client who wanted to sell their share and possibly a property. Maybe it's like a, inherited property or something like that. And I just want to say this because as I sit in the space that I sit in as an advocacy, and I hear a lot of problems that occur in community, there's a scam that happens in community, right? Where people come in and say, hey, we will buy, hey, you got ownership in this piece of property and we'd love to buy your interest in it. That's not the same as Pairgap. I want to be very, very clear about it, right? And usually in that, Sabine just made a very great point, right? Where in Pairgap, this process is very intentional with everyone involved. In those instances, that's not usually what happens. And it becomes an unfair process typically for the people that are left in the situation, right? Where someone comes in and they have some cash and they offer you $20,000 to take your share of grandma's house because it's you and 6 cousins, right? And they're going to give you $20,000 cash. You've never seen $20,000 cash. You jump at it, well, 50, and it seems like a ton of money when you're sitting on $1 million house in the middle of, I don't know, like a Bed-Stuy, Brooklyn or something, right? And someone wants to do that. That's not what Pairgap is. I mean, it could be something like that, but in Pairgap, everyone's involved in the conversation. In those types of situations, people actually can do a lot of really negative things to the family and the family legacy, to grandma's legacy. So you want to make sure that if you're looking to do something like that, or your clients are, and we're talking to real estate agents and real estate professionals in this meeting tonight, I want you guys to be clear of that it's not the same thing. And if your client or someone is looking for that kind of assistance, you need to be talking to someone like a Pairgap or a Sabine to really understand how to facilitate that and not just let them run off and get themselves and their family in a long drawn out legal battle where, trust me, it's not going to end up good.
Thank you, Janay. And I think this is a great segue to send it back to Jaqueline. And while you are talking, Jaqueline, I'm going to go ahead and put up the information for Pairgap and all of the great presenters.
Perfect. Thank you. Thank you, everybody. Thank you to our panelists and to everyone who took time out of their evening, after a long and busy day, finding opportunities for their clients and to grow their business, to invest this time to learn about what are some of the trends in the market that you can plug into, and what services are out there and partnerships are out there, like Pairgap, who has already done the legwork, who has already created a platform, who's already worked with a committee of attorneys to create, something unique in the market called the real estate prenup that you guys can take advantage of. And hopefully, as we've been talking, you've also been thinking about clients, friends, family for whom this might be a great fit. I think Janay's point about what Pairgap or what co-buying is versus is not is also a point well taken. And I just want to again thank the panels for sharing their expertise and making sure that we're all aware of something that can help. What will happen next? Oh, excuse me. I did want to get one final thought from each of our panelists, and then I'll share with everyone here tonight what they can look out for that we will distribute to all of you. So I'm going to go around the panel and in reverse order this time and ask if you've got any final thoughts or one takeaway that you would recommend based on today's conversation. So Jason, let me start with you.
I would say this just as a quick comment. I don't want any of our attendees to feel like this is just some kind of affordable lending product where we're just putting people who barely qualify together to purchase a home. This can be used for private client lending as well. This can be used in the affluent space as well. There's so much possibilities when using this platform. We definitely don't want to have anyone thinking or feeling like, hey, this is just for like affordable lending purposes? Absolutely not. This is open to everybody that may be eligible to purchase a home. And that's why we want to spread the word, let everyone know that we have the capability of doing this and working with Pairgap to facilitate home ownership.
Thank you, Jason. Janay, any final thoughts for our attendees?
Number one, I agree with Jason. One of the main times I thought about a concept like Pairgap, my potential client actually was trying to buy a multi-million-dollar property. It wasn't a low to moderate income property. It was actually like a $2-point-something million property, and they needed another person that could come up with the other, qualify for the other $1-point-something million. So it's definitely a product that can be used in any margin, right, along the spectrum. But there's a quote, and when I think of Pairgap, it makes me think of it. It says, coming together is a beginning, stand together is progress, and working together is success. And I think that's really what Pairgap is. It brings success to the table.
Awesome. I love that quote. Sabine, let me go to you next for final thoughts.
Sure. So I just want to sort of encourage people to think outside of the box. And there's so many things that are like invented or created where we're like, oh my God, it was so simple. Like, why didn't we think of that? You know what I mean? So this is like one of those things where we're looking at it with a new lens. We're presenting it different. We're being a little bit more creative how we're going about, protecting, and we're trying to sort of like get outside of the rigidity of how things were once done, right? So, we're putting a new fresh spin on things. And I want, everyone to sort of think about the ease and the burden that's being removed with, Pairgap and this whole co-ownership, transaction or a new way that we're doing things. And I think it's awesome, and I'm excited for what's to come.
Thank you. And last but not least, the host with the most herself, Nikki.
I just want to thank everybody for joining us today. It's been a long journey since I retired from banking to launch this platform. And as I continue to grow this company, it's really important to get all housing professionals on board as we think of innovative ways and tools to help our buyers afford to buy in this environment. So co-ownership with Pairgap enables agents to generate more leads and capture more commissions by creating opportunities to have new conversations with your buyers. And, one thing that I work with agents is look at dead leads. How many people have come and they're ready to buy and then get out there and see that it's unaffordable. So scrubbing that database to find qualified co-buyers is something that, is perfect for Pairgap. So I really want to thank you guys for coming out. The follow-up to this is all about the education. Pairgap provides a co-ownership training and certification. So this is actually a 3-hour continuing education course where you can earn credits, including the new requirement, and that's the hour of recent legal matters. So if you are agent or broker and you need credits, it's great that we can have this class and we can provide this class for you guys to get trained and certified so you can start helping your customers and you know where to find these customers. So we'll be sending out some communication, and also you can look at the QR code on the flyer and sign up so that you're able to get these alerts when the class is coming up. So our first class will be in 2023, but I encourage you to sign up and just learn about all of the new things that we have coming out in 2023.
Thank you. Thank you to all of our panelists and for our participants. Thank you again for your time. You should look out for 2 pieces of information that will come out to you via email from me, Jaqueline Plaza @chase.com. So don't be surprised when you get 2 emails. The first is going to contain all of the contact information for your panelists. So you can reach out to them directly so that you can subscribe to the information that Nikki just alluded to, so that you can get alerted when the continuing ed class is available, etc. And you can explore further partnering with Pairgap and all of the benefits that we that we went over today around co-buying. The second piece of information is for me and for Jason, because we like to partner and bring this content, partner with folks like Nikki, Sabine, and Janay, bring this content, this knowledge to all of you, our partners in real estate. And it's very important that we know what worked, you know, what you found valuable in this session, as well as what you would like to see in a future session, you know, that we can bring to you. So look out for those 2 emails so that you can continue to build your business, and we'll see you out there on the next deal. Have a great night, everybody.
Thank you, everyone.
Thank you. Have a great night.